First trading day of the year 2024. Some red ink on the left-hand side of your screen. Mike Lee joining me this morning. First off, Mike, I want to talk about Bitcoin. Why has Bitcoin gone to $45,000 as of today? Why the rally?
Stuart, the ETF approval is imminent. At least that's the speculation. And once it's available from an ETF from companies like VanEck and BlackRock and Fidelity, it's just a lot easier for a lot more people to buy. So it's going to introduce this, cryptocurrency to an entire new class of people that were unwilling to open up a cryptocurrency wallet online.
So it's as simple as that. It's like buying a stock almost. You buy a piece of the ETF, you buy it, you sell it instantly, whatever you like. It's that easy. That's the attraction here, right?
Yeah, because when you open a brokerage account, you have something called SIPC, Securities Investors Protection Corporation, insurance against fraud up to $500,000 per account. Whereas, we've seen with scandals like FTX and other cryptocurrency places, they might just run off with your holdings. Well, that's just not going to happen with like Fidelity, BlackRock, VanEck. And those are just three. There's like 15 of them pending for Bitcoin ETFs right away. It's going to create a scurry of buying and make it a lot easier for people to speculate on that asset.
Before we leave the subject, you're not a Bitcoin crypto guy. Would you be tempted to buy any crypto as of today?
Oh, yeah, absolutely, Stuart. And I don't know if I call myself a crypto guy, but I'm definitely bullish on Bitcoin just because, this ETF's coming, the approval is coming, and as well as the endless money printing from our government. The bull case is really playing out for the cryptocurrency.
Okay, what's your stock market outlook for 2024?
Yeah, great question. I think for the first quarter or maybe two or three, we're in for a rally. There's a lot of momentum behind this market based on a pivot from the Federal Reserve. Many are claiming a soft landing or success in their fight against inflation. I think that pivot is coming from economic weakness. And so I think at some point, the underlying economy and the stock market, those realities need to meet each other. But for right now, I think we are definitely in a bull market. You have like the industrial sector touching on absolute all-time new highs, all major indices hitting on all-time new highs. New highs normally beget more new highs. So a lot of momentum behind us. I think we're going to keep running.
When you first came on the show, I guess it was 4, 5, 6 years ago, we used to call you the raging bull. Are you a raging bull again now?
In the short term, I do think this rally will run out of steam at some point this year, and we're going to be mixed until the election. Even though I see bad things ahead for the economy, I think the market is likely to run out of gas versus correct materially. And then, if the election goes the way of the former president versus the current president, I think we're off to another multi-year rally.
Interesting. Mike Lee, thanks for getting back to us. Always appreciate it. We'll see you more in the new year. And you're going to stay there, though, as some commentary as the market opens. Thanks very much, Mike. Now, the opening bell is, 10 seconds away, so we always show you this shot. NASDAQ, big board, that's what we show you. The little lady will maybe press the button. I think the youngster's going to have the honor. Maybe. Let's see. Somebody's going to press it. Okay, not the little lady. There you go. The opening bell has rung, and I'm afraid we've opened sharply on the downside. The Dow Industrials in the very early going, down about a 0.5 percentage point. That's not a huge sell-off by any means, but you're 176 points down. But will you please look at that level, 37,500. And that's on a down day on a Tuesday morning. The S&P 500 also opening, of course. Let's have a look at that. There's the Dow 30. There's a preponderance of selling, obviously. I only see 6 or 7 stocks up. The S&P down a 0.5 percentage point. That's 26 points. And the NASDAQ Composite, which had a fabulous 2023, best year since 2003, it's down 0.89% right now. That's because Treasury yields have gone up. The NASDAQ always responds with some selling when that happens. How about big tech? All represented on the NASDAQ, of course, and only one of them is up, and that is Amazon, up all of 6 cents. Microsoft, Meta, Alphabet, Apple, all on the downside. Apple actually dropping below $190 a share. Check out Tesla, please. They reported 485,000 deliveries in the fourth quarter, bringing the total of the whole of 2023, delivering 1.8 million cars. That's why they're up in a generally down market. Mike Lee still with us. You know, those delivery numbers, they're pretty good. That's a very good number for Tesla, isn't it?
Yeah, it is. And since Tesla was cash flow positive several years ago, you knew it was just an engineering problem to where they could expand their production and sell more and more cars. This Cybertruck is going to be huge. I think the stock is overvalued, but I would not short it. I'd say that's like, sticking your hand into a fire. But I don't, they're not going anywhere. They're the dominant electric vehicle maker, not because of government incentives, but because they're cool.
Before we leave the subject, I just want to point this out. Quite a few electric vehicles lost their eligibility for tax credits after new rules went into effect in the new year on sourcing of the batteries. So that's to be considered with other electric vehicles. Move on to other stuff that's moving this morning. DoorDash. The Financial Times, that's a British business publication, they report that the company wants to expand beyond its core restaurant business. The stock is down $1. That's 1%. Mike, do you think they'll expand it to something like retail, maybe, or groceries?
Stuart, that would make a lot of sense for them. The stock was up spectacularly last year, and it's trading at a multiple of sales, and all they really are is a delivery company, even though there's some tech involved in it. But, I think they got to do a lot for this stock to get on my radar.
Okay. Right. Barclays, they just downgraded Apple. Ooh, who does that? They now consider them underweight. First time they've done that since 2019. They're warning of cooling iPhone demand. You still like Apple? Would you pick it up below $190 a share?
Yeah, absolutely, Stuart. I think the story with Apple, though, is their services. This is a $100 billion business growing at over a 20% clip on an annual basis with astronomical margins. I think iPhone demand, you have such a massive installed base and an upgrade cycle that continues to slow, but is not going away. And so I'd say, again, downgrading Apple is a brave move, especially in kind of the bull run market we're at right now.
Yeah, who downgrades Apple? Well, they did. All right, oil companies, they're getting something of a boost from a jump in oil prices this morning. There's fears of supply disruption following the attacks in the Red Sea from Houthi rebels. So the oil companies are up this morning. Would you put some money into oil, Mike Lee?
Yeah, Stuart, I think this is an opportunity to lighten up. I see slowing demand worldwide coming forth throughout this year. We were in a slowing global economy, even with the bull market and the Fed pivot. These types of opportunities are good ones to reduce some of the large gains if you've been investing in oil stocks over the last couple of years.
All right, you brought some stock picks with us. You've already gone through AMD, I got that. But you also like Google and Microsoft. Let me guess. You still love them as AI plays, correct?
Yeah, Stuart, yes. And here's why. It's most of corporate America, worldwide corporations have barely invested yet in artificial intelligence. And what that does, and when you start investing in it, you need quite a bit of computing power. And where are you going to put all of this computing power? Are you going to put it in your garage, your mom's basement? No, you're going to put it on the cloud. All right. Microsoft and Google dominate the space. Data continues to grow at an exponential clip, and you need some place to process it, some place to put it, and everything that you do to be integrated with all their different services. So yes, I continue to like this AI into the cloud play. And AI as a percentage of global tech spend is less than 3%. So for that to go to 5 or 6 over the next couple of years is going to be meaningful for all these other companies.
And you extend that to the chip makers. You've already told us about AMD. You extend this to a lot of different chip makers because they are an AI play. Yes?
Yeah, absolutely. So NVIDIA is the 800-pound gorilla. But as companies start to invest, you can't buy all of your supplies and all of your parts from one single vendor. So AMD and Marvell Technologies are the two to pick up kind of the slack there. So if NVIDIA is going to be a 90% market share from 98 or 99, these two other chip makers are going to pick up market share. It's going to be meaningful to their top and bottom lines. And this is the beginning of what I think is a decade or multi-decade long trend in terms of tech spend. And so these guys are the ones making money right now, and it's going to be an easy profits for these companies and for investors over the next couple of years.
Mike Lee, thank you very much for being with us on this first trading day of the new year. We always appreciate it, and I know we'll see you again real soon. Thanks, Mike.